The word of the day is bank run, and the headlines are pretty scary. Take a look at this. Silicon Valley Bank CO2 investors stay calm and don't panic. And usually when they tell you that don't panic, usually means it's time to panic. And in fact, take a look at the chart today. It was really scary in SVB. This is down 60% on the day, another 8-9% in after hours. And then you can take a look at this as well. This is on the year, so about 80% down, and you have that big drop today. And then you add in that other, 8-9%. It's like 90% down basically for this thing. And more headlines. Shares of SVB Financial fall more than 50% as tech-focused bank looks to raise more cash. So this is my understanding of it. This is a bank, right? Silicon Valley Bank. They had a lot of tech companies, doing business with them. Deposits are going up like crazy the last couple of years, and everything thought, everything was going to be great forever. And it was kind of the same situation where, say, tech companies overhire. Banks can essentially overcommit, over-leverage, right? Make some bad decisions thinking that everything's going to be rosy. When things aren't so rosy, people start pulling money out of the bank, hence bank run. And one thing that's going on is if you don't have enough cash on hand, you have to start selling off assets. One of the problems with the bank is if your assets, be it bonds, stocks, whatever, if they've gone into value, you don't necessarily want to sell for a loss. But if you have to give people their money back, that's what you got to do. And that's essentially what we're talking about here. And my understanding is they need like a couple $2 billion to get themselves out of this situation. It's not so great. That's how it is. And I mentioned bank run because this could be more widespread. Take a look at the headlines here. This is Silvergate. Silvergate bet everything on crypto, and I know how you think that turned out, right? Then it all evaporated. So don't bet everything on crypto. Take a look at this as well. Crypto bank Silvergate says it'll shut down as the market meltdown claims it's the first mainstream casualty. And the basic gist of it is that, I knew that crypto was at risk, right, of these kind of things, and we'll probably get more bankruptcies, this kind of stuff. So FTX, will Binance be next? We talked about this. That is definitely a house of cards. But when you start talking about something like your Silicon Valley Bank, it gets even worse. And moreover, will the big banks be affected with, say, over leveraging, over committing, bank run, this kind of stuff? And take a look at this. This is the bank sector, basically. Bank stocks sink most in nearly 3 years as sentiment sours. KBW Bank Index falls 7%. Was at the biggest drop since 2020 June. And then JP Morgan, Bank of America, Wells Fargo all drop 5% or more. And you can take a look at what happened today. This is basically all of the sectors are down, led by financials to the downside. So it's pretty scary out there. We've been talking about this. So, if you've been following the channel, you're okay, right? You know that you want to be diversified. You know that you don't necessarily want to be throwing everything in there. Or if you played the trade perfectly, because perfectly frank, guys, if for those of you who say, hey, you know what, I'm going to YOLO in like December-ish, get out and February-ish, you would have done fantastic. But it's not that easy to like perfectly time the bottom and the top. I mean, that's just how it is. And all along, I'm just like, what the heck's the market doing? Aren't they listening to the Fed? The Fed's raising rates. But it turns out, though, that they're getting more bearish projections coming out of Wall Street. JP Morgan, for example, this is today. It's like there comes a point where they're like, you know what? We can't keep a secret anymore. Let's go ahead and tell people the truth. And who knows what the truth is? I mean, look at this. S&P 500 could fall 20% by mid-year as Powell's hawkish testimony sets the stage for higher rates than markets were expecting, JP Morgan says. And that part's always a weird one to me because, yes, the market's been going up. Guys, I get it. The market's been going up the last, couple of months, but I've been saying all along that it's weird because the Fed has been saying we're going to raise rates, we're going to keep them there, and we're not cutting anything till maybe next year, and who knows, right? Right now, the word in the street is that, the next rate hike may be 50 basis points. You get to a terminal rate around 6% is sort of the dialogue, but usually when JP Morgan's saying, hey, 20% downside, that they try to give you a rosy scenario. So, who knows? They're saying maybe 3,200 on the S&P. Again, I can't predict the future 100%, but I can sort of say, hey, I think this is sort of where we're going. And one of the things that's also going on with the banks, as we talked about, this is right now, savings accounts are actually pretty attractive. You can just hold cash and get 4% return just by having a savings account. But here's the thing, though, and we talk about this in comments, the bigger banks like your JP Morgan isn't necessarily offering that. You have to essentially move your bank to a small bank, and then they'll offer the better savings accounts. And so this is sort of the thing that's been going on at, be it SVB or be it JP Morgan or whatever. is people are like, you know what, I don't want my money there because you're only giving me, 1 or 2%. I want my money somewhere else where I can get 4%. And I don't necessarily want to play the market. And you're looking at bonds. I mean, they're like at 5%, these kind of things. And essentially, a lot of people are moving money around. And then as it's turning out, sort of when these flows of cash go, in and out, some of the essentially people who are swimming naked, like your SVB, are definitely exposed. And that's like a big shortfall, 2 billion or whatever. And we've seen this before with something like your Credit Suisse as well. Now, whether or not, there's like criminal activity, this kind of stuff, who knows, that remains to be seen, because I mentioned that because the Silvergate thing could end up being something scary in that regard. And, usually when you have like this major of losses, and also you have, this people shutting their doors on their businesses, those kind of things, that's why I mentioned this sort of criminal stuff, because I lived through the 08, 09 stuff. And I'm just telling you guys, there's a lot of foul play going on. I'm not saying, who's doing it, they're doing it for sure, et cetera. I'm just saying, I'm not going to be shocked if this kind of stuff comes out, because we're talking about so much money. Also, too, jobless claims came out. So you can see here, U.S. jobless claims jumped, but remained historically low. Essentially, the labor market still remains tight. There was one particular story, though, that really stood out to me, and this was the GM story. If you guys saw this one, here's the headlines. General Motors offers buyouts to the most U.S. salary workers to trim costs. So the sort of language they were using is that they were going to be offering the majority of workers like, hey, leave your job, we'll pay you a bunch of money and just go away, which is like, they need to trim costs. And so they're I guess in their calculations, it's better just to pay someone to go away than keep them on staff. And they're saying they're doing that to the majority of workers. And I'm just like, what? And it's like kind of crazy. Like, don't you need workers to build stuff? But evidently GM is more concerned about cutting costs. And that's a thing. So that sort of shows me that they're thinking that things are definitely going to slow down. And this is something that we've talked about, to where, like, we talk about, say, like, for example, Tesla, which is a real popular stock among retail investors, is, why would Tesla sell, a bazillion more cars when, people are losing their jobs and interest rates are going up? That's the question I pose. And I think something like a GM is answering that. They're saying, well, answer is, we're not going to sell more cars. Now, I guess, I don't want to get into Tesla too much, but I guess the argument would be like Tesla bulls are thinking, well, all that business is going to come our way. I don't think it's going to work that way. I just think that you're going to see a slowdown everywhere. And there's already started to see signs of it. Another example is we've been seeing that some of the big commercial real estate landlords aren't paying their mortgages. And just this is all put together emblematic of that things are slowing down. The Fed is raising rates. And it's not like these things were unexpected. This is something that you could see a mile away, just that you have to be sort of like, how can I say, plan ahead and be cautious about these things. What I mean by that is, like, the people who didn't plan ahead just figured that the Fed was lying. They'd never seen the Fed raise rates before. And if, like, you're older, and for those of you watching this, like myself, who lived through, .com, lived through 09, maybe grew up in the 80s, these kind of things, we remember a time when inflation used to be a real thing. And we also remember a time when, like, mortgages used to be really high and interest rates were high. So it seems like we're going back that direction again. And now you got all these people starting to realize it. So, it doesn't mean like everything's going to go to zero. It's not going to be like that. But if you are in risky things, yes, there is definitely risk for that. So I'm not worried about McDonald's, going out of business. I'm not worried about that. But I would be worried if I'm buying, coins with dogs on them, that those are going to go to zero. That's definitely, I'd be worried. So those are my thoughts on the market. Love to hear your thoughts on this. And did you see this kind of thing in SVB Bank? That's pretty crazy, 70% in a day, and it's like 90% on the year. So down that is. So thanks again for watching, everyone, and I'll catch you in the next video.